Today, I would like to talk to you about the Irish forest product sector, the impact of COVID-19, the felling licence crisis, the impact of Brexit, the Irish economy, and finally, the new built homes market. Just to give you a brief update on Glennon Brothers since I last spoke to you, we were delighted to have won the TTJ Softwood Trader of the Year award for 2019 and then again in 2020. And we were thrilled to be awarded the Best Supplier Customer Experience at the 2019 Hardware Association of Ireland Awards. We have been continuously investing in our sawmill operations, particularly at our Windymen site. We have completed a 14 million installation of a state-of-the-art log sorter line, increasing our efficiency and throughput. Our 18 and 19 volumes were impacted by many challenges, including stockpiling in anticipation of hard Brexit and the impact of the bark beetle. 2020, as we've heard today, of course, was a completely different year for everyone. With 9 weeks of being reduced to single shift production, geographic markets moving at different paces, and coming to terms with the pandemic, disposable income increasing for some as a result of spending more time at home, meant the appetite for home improvement increased exponentially. The supply chain was soon bereft of stock and has been a truly collaborative effort between sawmills and the supply chain over the last 12 months. As a result, we've delivered a successful result in 2020 with the volumes back up at the 2017 levels. There has been very little change in turnover between 18, 19 and 20, which highlights the many fluctuations in timber prices during this period. And you can see we have been continuously investing in the business. Now turning to the Irish forest product sector. Since 2018, Forest Industries Ireland has become the leading representative body for the sector, which has enabled the industry to speak with one unified voice. Thanks to our favourable climate and soil type, we can grow trees twice as fast as our Scandinavian competitors. Forestry in Ireland has an inherent competitive advantage. However, only 11% of our land is under forest cover, which is well below the European average of 38%. The Irish forestry and forest product sector supports 12,000 jobs and contributes 2.3 billion to the Irish economy. We now have an internationally competitive sawmilling and board manufacturing sector, and experts from the forest product sector in the Republic of Ireland are worth over 450 million. Quilcha owns 7% of the landmass of Ireland. Pre-felling licence crisis, nearly 80% of the roundwood supplied to the sawmills in the Republic of Ireland came from Quilcha. Exports of wood-based panel products amount to approximately 245 million, and 90% of panel products produced in Ireland are exported, with 2/3 going to the UK. Now focusing on the sawmilling sector. 5 large and 3 medium-sized companies represent more than 90% of the Irish sawmilling sector. The sector has invested more than 250 million to create a modern, efficient and customer-focused industry. The sector employs 2,500 people. Recent developments include the rebuilding of the GP Wood sawmill post the fire and the recent acquisition of Coolrain Sawmills by CJ Sheeran, the pallet and packaging manufacturer. In 2019, sawmills in the Republic of Ireland utilised 2 million cubic metres of roundwood to produce 1 million cubic metres of sawn timber, and domestic consumption was over 440,000 cubic metres. Exports to the UK from the Republic of Ireland represented approximately 9% of the overall UK imports of softwood, equating to just over 550,000 cubic metres when you include the north of Ireland. In our view, the combined output of the sawmilling industry in the Republic of Ireland and Northern Ireland, including round stakes, is 1.4 million cubic metres, of which 43% goes to construction, 23% to pallet and packaging, and 21% to square head fencing. We estimate the sawn softwood market on the island of Ireland to be circa 1 million cubic metres, and our view is that homegrown timber has around close to 2/3 market share. Ireland's key market for sawn exports has always been the UK. Over 95% of all softwood exports from the Republic goes to the UK, valued at approximately 150 million. The single biggest challenge to the Irish sawmill sector as we stand here today is the catastrophic situation we find ourselves in regarding felling licenses. And whilst COVID-19 has changed the way we operate, both in the short and medium term, the fundamental crisis associated with the felling license process threatens the very existence of the sector, as well as many of its 12,000 jobs. Backlogs in the state's forestry licensing and appeal system have created silvicultural, supply and employment problems for processors, forest owners, contractors and forestry companies. Quilchua's volumes were down over 400,000 cubic meters in 2020, which is over 20%. This trend has continued into 2021. We have had no log auctions so far this year. Normally we would have had 4 by now. This is having a detrimental impact on the supply of raw material into Irish mills. It is driving up prices for private supply and supplementary logs coming in from the pest-free zone in Scotland. We are seeing the lowest level of afforestation in decades, with only 2,400 hectares planted, which is 56% down in 2017 and compares disastrously to the government's own target of 8,000 hectares. The current licensing backlog stands at 4,500 applications stuck in the system. 57,000 hectares of felling licenses were issued in 2019, compared to only 18,000 in 2020. This is a shortfall of 39,000 hectares. Sawmills are battling reduced production and are forced to import logs and sawn timber to meet customer commitments. Forestry companies struggling to survive are at a critical existential operating levels. The 2020 Forestry Act has helped with one aspect of the problem, but is far from solved it. Implementation of the 2019 McKinnon report on reforming forestry licensing is urgently needed. The report specifically highlights urgent needs to addressing weaknesses in project management and communications, without which very little progress will be made. Brexit. The sector's primary objective was to maintain a continuity of supply through the Brexit transition. A lack of urgency and shortfall in administrative capacity has led to some delays in obtaining phytosanitary certs for shipments of logs and sawn timber with bark. Additional costs have been felt as a result of customs clearance compliance and associated admin. Extended lead times to customers are a result of the more elongated process. Future-proofing of product marking conformity and changes in authoritative bodies is ongoing. In January, trading between Ireland and the UK fell sharply, with imports from GB into Ireland dropping by 65% and exports from Ireland to GB down 14% versus the previous January. Some of this can be attributed to pre-Brexit stockpiling and challenges with COVID-19, but it is far too early to assess the full likely impact of this yet. Now turning to the Irish economy. Notwithstanding the terrible effect that COVID-19 has had on many lives and the harsh realities as a further consequence of living with a global pandemic, the Irish economy, by comparison to many others, has remained relatively strong and robust. The economy itself grew by 3.4% in 2020, despite one of the toughest pandemic-related lockdowns in Europe, on the back of record growth in the export sector. GDP is forecast to increase by 3.1% in the current year and 4.3% in 2022. Unemployment inevitably rose in 2020 and was at 7.2% at the end of the year, compared to 4.7% in December 2019. The big concern currently being masked is that underlying unemployment, after taking into consideration the government's support, is estimated to be at 25%. Our view is that many of the small businesses currently being supported by government assistance may never reopen. Looking to the future, Despite the significant challenges of COVID-19 and the full impact of Brexit still to be worked through, there are reasons to be optimistic about the Irish economy. The last number of months have again demonstrated the resilience of Ireland's export-driven growth model during challenging times. We look to be on course to be the only country in the EU which grew exports in 2020. It is mooted that a trajectory of Ireland post-lockdown recovery is on something of a K-shape. This occurs following a recession when different parts of the economy recover at different rates, times, or magnitudes. There are a number of key sectors in Ireland bounding forward, such as IT and pharmaceutical, whereas those hardest hit by the pandemic, such as hospitality and leisure, remain on the floor. This multi-track recovery is more pronounced in Ireland than many other countries due to its prevalence in the pharmaceutical and IT sectors, with Pfizer, Johnson & Johnson and GSK, as well as Google, Facebook and Intel, all having a large-scale presence in Ireland. Timber exports contribute in this regard, with roughly 56% of all Irish timber production exported and 95% of that going to the UK. From the pink line, you can see a large increase in household savings despite high unemployment, as spending opportunities were curtailed. There has certainly been a silver lining for the home improvement sector. Disposable income burning a hole in consumers' pockets has served to stimulate the wider construction products market since lockdown began. Despite the severity and length of lockdown, 2020 house completions reached 20,700, just 1.9% below 2019. Quarter 4 ended the year strongly, up 16% year on year versus quarter 4 2019. Forecasted house starts for 2021 are set to drop to 16,000 as a result of the extended site closures. For every week that is lost on site, the knock-on effect will lower the annual output by over 400 units per week. Central Bank has estimated that up to 35,000 homes need to be built every year to 2030 to keep up with demand. But we still face significant challenges to achieving this goal. Ireland has faced the longest period of workplace lockdown in Europe. Furthermore, the European Construction Industry Federation confirmed that Ireland is the only country in Europe where construction has not opened since Christmas. From a sawmilling perspective, the type of homes being built will have an effect on demand. In quarter 4 2020, schemes made up 56% of all new dwelling completions, while 23% were apartments and 20% were single dwellings. This is the first quarter since the series began in 2011 that has seen more apartments than single dwellings completed. This is a worrying trend for the sawmilling sector, as apartments don't use as much timber as single dwellings. In conclusion, we have a robust and resilient processing sector which continues to thrive in the face of adversity. Most of our sawmills are family businesses with flat, customer-focused structures and are both positive and passionate about the future of our sector. We face huge uncertainty as a result of COVID-19 and the battle against the felling licence crisis in Ireland. But the Irish sawmilling sector has always been committed to the UK, and that will not change. We've overcome massive challenges before, and I'm confident that if we work together, we can do it again. On behalf of the Irish sawmilling sector, I would like to sincerely thank all our UK customers, especially those on the call today. Over 2,500 people depend on you for their livelihood, and on their behalf, I want to say a big thank you. I only wish I could enjoy a drink with you like we normally would do, but hopefully those times are not too far away. And thank you for listening.
Thank you very much, Mike. That was a fantastic presentation and very good insight into the situation in Ireland. I'm just going to pick up on a couple of questions. We are running about half an hour behind time, so I'm going to take a couple of very quick questions, and then, so long as everybody's bladder is holding up, I'm going to we're going to move straight into Noble's presentation. However, just to start, Keith, you mentioned about the growing interest in or dominance by private equity groups within the merchant and distribution market. Does that in itself change anything in terms of the pattern of product orders? Are you seeing them, whilst you get the consolidation within those groups and those chains, is that also leading to a kind of a shortening of the range of products that people are buying, or any other changes in business practice?
It's different across the different groups. Some are continuing to buy much as they have. In other instances, you can see the influence of the financial people much more strongly, with increased pressure to turn over stock, to carry less stock, which in my personal view has an adverse impact on trading ability.
Yes. Yeah. Yeah.
You need to have stock on the ground to sell it. If your driver is to minimise that stock on the ground, you're missing the opportunity.
I did wonder if that was slightly exacerbates some of the problems that we've seen due to the COVID.
And that's why I'm very careful, because different groups have handled it in different ways without wanting to name and embarrass. Some have gone the other way and have enthusiastically said, we need to have stock, we're going to commit to that, and made a real success of it. And others, and to be fair, it's not just the PE businesses, others that have a higher degree of control by accountants, I think, have not fared as well as they could have.
Yeah.
In the last 12 months.
Yeah, they don't want the risk of carrying the stock, but
Correct.
At the moment, if you haven't got the stock, you don't make the sales. I just wanted to ask you as well. You showed a picture there on the James Jones site of logging in to your account and so on. One of the things that a lot of members have talked about, and that we're going to be doing a lot more about within TTF, is about online sales. And some see this as a great asset to the company, a boom for their company. Others see it as a major threat and a big worry. And I just wondered, do you see this as a growing trend? Do you think that's
Yeah, I mean, that screenshot was of our fencing app, Fence Master, that we launched this week. And that's an online tool available to our distributors, and it's picking up on let's call it the skills gap in the industry. I think we've all recognised that, for many years, timber merchants increasingly becoming generalists. They don't have that depth and length of experience in timber, even to the extent that when turns up on a branch and says, I want to build a fence, the individual on the counter often has no idea where to go.
Yeah.
Moan about it. We've taken the view, well, let's provide a tool to people that says, here you go. You're very used to using a smartphone. Tap away on your smartphone. That will help you design your fence. It'll come up with your bill of quantities, and it'll fire the email off to whoever your nearest distributor is. And I think there will have to be more of that. That skills gap is not sudden. We can moan about it all we like. We're suddenly not going to have a generation of trainees across hundreds of branches. So it's incumbent on us to help provide some of the tools to do that.
Okay, excellent. Mike, just turning to you, a number of factors there at play in the Irish market there that you seem to have successfully navigated. So well done, and keeping going through there. You were also the first. I mean, this is the first of the Softwood conferences that we've done since the UK left the EU. The transition period's over, and we're doing that. Ireland is clearly one of the major flashpoints in post-Brexit trading. Do you see that we haven't really had all of the customs changes kick in yet in the UK? Do you see that is going to be more of a longer term threat as we come out of the COVID things, that's still going to be an area that you've got to negotiate and navigate to maximize your business?
I think, in fairness, the speed to which the sector and indeed government departments had to react from a decision made at the end of the year, and then with effect from, it was an unrealistic expectation for things to move freely and positively. I think most people saw that, and I think the drop in January of trade is probably as much influenced by pre-Brexit decisions, because people want to make sure they got stocked up beforehand. I mean, there are numbers, when you bring in, no disrespect to any, but when you bring in government departments and customs and regulation, I mean, cost goes up, time rolls out, and that's just the nature of, if there was when we were in the one trade agreement, that's the benefit of being in the one trading arena where there is no customs clearance and all this. So there has to be a downside of coming out of it. I mean, to date, we're happy enough how it's gone. I mean, and if we look at from our perspective, the north of Ireland is a very important market for us. So the Northern Ireland trade has been handled by the protocol, and that's working reasonably well. Our sales to the mainland is working reasonably well. Probably the area where I'm hearing most complaints about is trades from England over to the north of Ireland, and it doesn't impact us because we don't supply the north of Ireland from any of our Scottish facilities. We supply them all from our Cork or Longford facility. So I don't have it, but it's the one that is getting the most airplay. Now, some of that can be political and some of it can be factual. But I think the impact is far from being clear. I think we have a few more months to go on this before we see the full impact of it.
Okay. And Keith, just turning over to you, we've had a couple of questions pop up on the chat. Do you think that the customs rules, the ongoing issue there, notwithstanding the fact that we've got supply chain issues anyway, do you see it sort of strengthening the role of the UK sawmilling sector in the market, or
Absolutely. I think one of the comments I made last year was that, selfishly, from a UK sawmill perspective, Brexit was a good news story. So yeah, any supply difficulty into UK PLC on timber benefits the domestic mills. Having said that, I think the increase in demand is greater than our capacity, so we need these imports. They need to be resolved. My number of 3.8 million, it might be out by 100,000. We still need all the production from Mike and his Irish colleagues. We still need all the Swedish and the German. So these need, any issues need to be ironed out.